being maintained by the benchmark indices as we speak. So yes, good going coming in for the markets. 0.6% coming in for Sensex as well, which is seeing an uptick of about 370 points, taking it surpassing that 61,500 mark as well. Nifty Bank, a tad bit underperformance when you compare it with the benchmark indices. Yes, it is in the positive territory with 0.4%, a tad bit lower than what the benchmark indices are posting. Let me take you through the list of gainers in trade today. And Tech Mahindra, that one is powering ahead and continues to power ahead. It is a top gainer on the Nifty as we speak. 5.8% uptick coming in on Tech Mahindra, followed by an ONGC, Apollo Hospital, Adani Enterprises, as well as Divi's Laboratories. All of them are posting good gains in trade today. But on the flip side, you only have a handful of losers, Winnie, and all of those losers, we look at the way how they are losing, is below that 1% mark. So you have BPCL, which is the top loser on the Nifty, 0.7% downtick for BPCL. Then it's Hero Motocorp, followed by Bharti Airtel as well as HUL. So these are the list of losers in trade today. So let's take a look at what are the sectoral indices doing, and surprise, surprise, all the sectoral indices are in the positive territory in today's trading session. The least amount of gains being made by the FMCG index, followed by auto index, but the top gainer today is definitely Nifty IT index, is holding on to gains of about 2%, followed by realty index 1.5% uptick, 1.1% uptick for realty index. Metal index also holding on to good gains of approximately 1%, and broader markets as well seeing healthy gains, with small cap index ruling among the broader markets, 0.9% uptick coming in for small cap index. So for all in all, Avani, looks like a weekly expiry. We are going to see a healthy close, at least for now. 18,100 is being maintained.
Absolutely, 18,100 is maintained as of now. But let's just understand, what is happening in the markets. Where are they actually headed? And obviously, today's experts, we have Kunal Bothra as well as Rajesh Aggarwal joining in with us. Good morning, gentlemen, and welcome on the show. And Kunal, I'm going to just start with you. We've spoken about the markets, that 18,000 mark. It's about that 18,000 mark now. Will Nifty break out, from here on? We had seen a bit of a range-bound move coming in. What are you seeing in terms of the markets now?
Good morning, Vinny, Cheryl, Rajesh and everyone. So my belief is that this is a strong breakout for the Nifty which has happened in the last 2 days. We've managed to break past about multiple resistances. One was a downward sloping channel. As you can see, for the indices, the Nifty breaking past about those levels. Indicators giving a confirmation of a breakout. That's a more hearty sign for the indices. And the second, the most interesting aspect is that look at the breadth of the market, not on the mid cap or the small cap front, but more on the larger cap names. Many large cap stocks are making a strong comeback. The Nifty IT sector, so we were always looking out for more leadership in terms of the sectors. That has arrived in terms of the Nifty IT index, making a fresh 9-month, 10-month swing high for itself. So when you have such kind of a composition of the indices, large cap names participating quite well, and mid caps, small caps chugging along quite well, I think that's a sign that the market trend is here to sustain. Now 18,000 could act as a support or a base for the index, and we would expect that there would be a round of short covering which could probably come by into the index and which can take the index higher. So would maintain the bullish stance on the index, and now expect 18,000 to be a key short-term support for the Nifty.
All right. Just for the benefit of our viewers, which is the support level that you just mentioned, Kunal?
18,000.
18,000 is the support level for Nifty, and looks like, yes, good days are likely ahead of us. And Rajesh, very good morning to you. Good morning to you as well, Kunal. But Rajesh, what's your sense of the markets? What do you think will be the next set of drivers coming in for the benchmark indices, and how crucial it is for one to follow a standard good investment strategy when it comes to kind of beating the volatility that we had seen in the market? What should retail investors do to protect their wealth, and which are the key drivers that you see going ahead?
Good morning, Cheryl. Good morning, Vinny. Good morning, Kunal. We are very bullish on the market, and we have been bullish since a very long time. There might be hiccups in between. There might be some amount of correction. We might see sometimes news coming of conductors, conflict, crude, currency, container shortage, Russia, Ukraine. These things will happen in between. But one thing is for sure, markets are going to go up. There's no doubt on that. Since the start of the Sensex, when it was at 100 and now it's 16,000, if you look at the CAGR returns, it has given a CAGR return of 14%, right? And when in 2025 we will be sitting on this buy now, sell now, and we might be talking of Sensex at 1 lakh. So that's the point. Now, what's going to take this market ahead? That's capex. If you look at the numbers, only Bajaj, only Birlas, Tatas, and Ambani's has announced a capex of 250 billion. And in the recent budget, finance minister has announced a capex of 10 trillion. And most of that is going to infrastructure, railways, and defense. And that speaks a lot about where the Sensex is headed. Because if this kind of capex is going to be there, it's bound to go up. In between, there might be some volatility. Sometimes it might go up, sometimes it go down. But for a long-term investor, it's best to be focus on the individual stocks, individual investments, whether they are good or not, and stay put with it. Don't expect irrational expectations from a stock because some of your friends have gained 500%, 600% on that. It might not happen every time. You have a rational expectation of 15 to 18% CAGR in good stocks. Be with your stock, forget the news flow. Go and revisit your stocks. If there are good in fundamentals, stay with it.
Okay, that's the view coming in from Rajesh. But on that note, we're going to slip into a short break, but don't go anywhere. We will be back and we will be taking all your stock related queries after this break.
Powered by Housing.com. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
The market's really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
Broader markets really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9
Welcome back. You're watching Buy Now, Sell Now on ET Now, and this is a show where we get you answers for all of your stock-related queries. So, viewers, you can tune in on YouTube, Facebook, as well as on Twitter. We are live on those social media platforms. You can leave a message there asking about your stock-related queries. So, if you've already purchased a stock, do mention the buy price, the quantity, and also the time horizon you're looking to stay invested in a particular counter. And if you have not yet invested, then do mention about the time horizon that you're looking to invest in a counter. You can also connect to us via the WhatsApp number that's flashing on the top of your screen. So let's get going with all of the stock queries that are piling up. This one is coming from Hemant Datta, and he has Uno Minda shares as well as Garden Reach, both shares. He's actually suffering losses on both of these counters. He wants to know whether he should average now for the medium to long term. And I'll take this query to you, Rajesh. Garden Reach and Uno Minda are the counters where he's saying he's suffering losses. So what should he do in both of them?
See, both are a hold from our side. Both are fundamentally very strong companies. Both are doing very well. The M2M losses or the nominal losses which the investor is witnessing just because of market has been subdued from a very long time. So that's the only reason I can find. Otherwise, if you look at the numbers have been pretty good. Both the companies are doing well. Uno Minda is doing very well in the anti-auto ancillary space, and Garden Reach is has a very good order book on a shipbuilding side. I think both of are a hold from a side at this point of time.
Kunal, this next query we have is coming in from Karthik, and this one is on Nucleus Software. Now, they're saying that currently Nucleus Software, the 50 DMA as well as the 200 DMA are in the same place. So, they have not seen something like this come across before. Does this signal anything? Because currently they're holding 340 shares at an average price of 550 rupees over the last 2 years. So, what should they be doing in this scenario now?
So, yeah, that technical term which we call it as a convergence of both these averages is golden crossover, where the 50 DMA crosses above the 200 moving average, and the intersection point is exactly the same for both of these averages. Now, all you have to do is, so the golden average crossover is a phenomena which varies from stock to stock. Now, for the stock Nucleus Software as of now, the historical precedence in the last two such golden crossovers, the stock went into a breakout, but then post that in the next 1 week, the stock went into an immediate correction, and a mild correction as such, 5% to 7%. So if you go by with a similar kind of a expectation this time around, the stock may get into a marginal correction, say come back towards 480, 485. So I think a better trade would be to try and book out some profits over here, look to buy back again closer to that 480, 485 mark, and then look to ride on to the next trend on the upside.
All right, the next query that I have is coming in from Saumitra, and he wanted to move his money from an HUL to corrected small cap names like Deepak Nitrite or Lakshmi Organics, or for the matter of fact, even Aavas Financiers. He's asking, does this move make sense? And if yes, is it the right time to do it now or still wait? I will take this tricky question to you, Kunal.
So I would suggest to hold on to the stock as of now. I understand that the stock has not gone into the thick of a uptrend in the entire 2022 and has gone into a correction phase. But I think Deepak Nitrite is something which I would recommend as a buy or a hold. HUL and the entire FMCG pack, I would be a bit iffy in terms of initiating any longs over here, because my sense is that when the market gets on into a risk-on mode, it's the high beta stocks in the sectors or slight high beta stocks in sectors which tend to outperform. FMCG defensives, they tend to participate quite well in terms of high volatility. But right now, I would believe that the likes of Deepak Nitrite and most of the other chemical names, etc., they could stand to outperform, given the fact that these stocks have already gone through a sharp correction.
Rajesh, this next query is from Chetan Shah from Kenya, and this one is on two stocks. One is they're holding 300 shares of Caplin Point at an average cost of 526 rupees per share, and the other stock they're holding is Glycol at 530 shares at 438 rupees. What should they be doing with these two stocks? Should they continue to hold this, sell, average? What is your view here?
See, Caplin Point is a hold from our side. I think this stock can easily touch around 725, 750 in the next 3 months or so. So one can continue to hold. And what was the other one you said?
One is Glycol.
Sorry, India Glycol.
Yeah, India Glycol.
India Glycol is a buy. India Glycol is a buy from our side. One can go ahead and average also if somebody likes. The numbers have been quite subdued this time because below expectation this time because of various reasons. But going forward with the kind of stories going on, with the kind of capex this company has done, the management guidance given, I think this stock can easily touch 750 odd rupees in the next 1 year. So one can continue to hold if one has a time horizon of 1 year.
All right, this next query is coming from Saeed, and before I proceed with the query, I'll request my producer Abhishek to show a graph of Indigo from September right up till now, and if he wants a precise date, then it would be September 8th, 2022, right up till today, that is 16th of February, if possible, Abhishek. So Syed is asking that his query is that he bought Indigo at the levels of about 1900 rupees per share. He wants to know the move of the stock price, given the last time also we saw a big block deal. You know that today you had the news that one of the promoter entity was offloading stake in Indigo via block deal, and that block deal did take place, about 4.4% equity block deal. So he wants to know what is now the stop loss and the targets for this particular counter, Kunal. He bought it only for pullback. So as you can see it on your screen, the particular counter saw a downtick of approximately 2% since September till now. So what should the strategy now be for Indigo, given that we've seen this big block deal take place and we've seen aviation sector also a tad bit under pressure of late, Kunal?
See, ideally, when stocks stay open with a gap down, and I'll look at it as a pure technical process, that when a stock opens with a gap down and goes into heavy selling, and the gap is not filled for quite some time, there is always a likelihood or a higher probability that the stock would continue to go into a downward pressure. Now, add to that the fact that the stock is also nearing its 200-day moving average, which is just, I think, 30-40 rupees below the current market price, I think just around at 1870 levels. So, ideally, what I would expect is that the stock would probably at least retest the previous 200-day moving average, maybe fall by another 30-40 rupees. So, I think 18-20-25 could be a good point where you may look to start averaging into Globe Aviation. And on the upside, if the stock breaks past about, say, yesterday's low, which is I think 1995-2000 approximately, that could be a point where you may look to just hold on to the stock and expect much higher gains from those levels.
Rajesh, the next query is on Devyani International. Suraj from Kochi is holding 1000 shares of Devyani International at a price of 187 rupees per share. Should they continue to hold this or average out or actually exit the stock for a long term?
See, for a long term, one can continue to hold. The business is doing well, although the numbers this time were in pressure. But going forward with the kind of raw material prices going down, I think they are going to do well. The same store sales growth is going to improve, and they are opening new stores too. So I think one can continue to hold with a target of 175 rupees.
Right. Talking about Devyani International only, we have another query that's from Satya, and what he's asking you whether he should switch from his losing counters like Hikal as well as Devyani International to some other sectors stocks like paints, or should he stay put with it? He's asking if not paints, should he look to move to EID Parry instead, Rajesh? So he has Hikal, he has Devyani International. He's making quite a lot of losses in both of these counters. So what should his strategy be? Stay put or move to paints or EID Parry instead?
What was the third one? You said FAME.
No, paints. Either
Not
paint
getting you.
sector. So what he's asking,
okay.
either
Okay,
should he
okay,
move to paint sector or EID Parry, which is in the sugar space?
See, out of all those stocks which the gentleman has mentioned, I think EID Parry is the best. The company is available in a market cap of around 9 to 10,000 odd crores, and it holds Coromandel International, which is its subsidiary, the valuation of which is around 16,000 odd crores. That means you are getting EID Parry almost free, even if you give a 50% holding company discount. They have sugar plant, they have ethanol, they have distillery, they are into cogen of power. The management is very good. Long term is very bright. I think maybe a target of 650 odd rupees the next 1 year is quite possible. So out of the stocks which has been mentioned, EID Parry stands out the lot. In paint industry, I think even after this kind of correction, the valuations are on a very high side. Maybe after some amount of correction, one can have a look at either Asian Paints or Berger Paints.
Okay, Kunal, the next query is from Subrata Mukherjee, and this one is on Tech Mahindra. They're saying, I'm sure they're making a profit because they said that whether is it the right time to book profit in TechM and shift to some other shares or continue holding TechM, and if they have to buy another share, which one would it be?
Well, I would suggest to hold on to Tech Mahindra as of now. It depends now what's your exact buy price and how much profit you are sitting in. But I would expect that, assuming if it's say a margin of 8 to 9% on Tech Mahindra where you're sitting in profits, I think it's a good zone where you should look to hold on, because the last 2 days of price action indicates that this could be a big trend for Tech Mahindra. Yes, there could be a minor pause, a minor correction in in the next couple of days. So we call it as a retracement. But then after 2 days of very strong uptake, good price volume as well as F&O action, I would expect that this stock should gradually head towards 1180 to 1200 as well. So it all depends on what's your initial buy price, how much is the buffer you've already made in terms of profit, and how long you can wait on to the stock.
Okay, let me take this query. It was from Indu, because she had written to us yesterday as well. Couldn't take a query then. She wants a technical view of Grindwell Norton. She's already holding some shares at the levels of 1650 rupees per share. Kunal, she wants to know, will it touch 2200 again, or should she book out?
I think it's a good stock. You can look to hold on. Difficult to say that whether the stock will hold on or cross that level of 2200, because the recent sell-off from 2150 odd mark to 1900 has been quite sharp. So it's so the average volumes is as it is low for the stock price, but then compared to the previous rise, the selling or the volumes on this leg of selling for the stock was also pretty much high. So that indicates that the stock may remain under some bit of selling pressure for some more time. But then if you are already bought at 1600 odd levels, you're sitting in good profits, I think you should probably give it more time. So maybe in the next 1 to 2 months, if the prospects improve for the stock, then I believe the possibility of 2100, 200 is high for the stock.
Rajesh, we have Leon, who's holding 1,200 shares of BEL at 100 rupees. What should they be doing with the stock for the next 1 to 2 years? What's your view on this?
If it falls to maybe 85 levels for any reason, it's a good ad. As we talked about the capex being announced by the government of 10 trillion crore and a big chunk going to defense, this company is going to be a big beneficiary of that. Hold on to the stock for 2 years. One can keep a target of 110, 115 rupees at this point of time, going by the numbers.
This one is from Manish Raju, and this one is on 2 counters, Kunal. One is Nava and one is Medanta. Medanta is a recently listed counter though. He's saying that they both are witnessing price volume breakouts, hitting 52-week high today. Do you see any of chances, any changes in their charts, or is it just a single day move? And are you expecting some more up move in both of these counters? Because he's looking to enter Nava at current market price, and he's already holding Medanta at IPO price.
I think it's a very good sign. In fact, I know this is what we typically wait out for. So I understand that the price history is limited for these newly listed names, but the pattern which we typically look out for is that whether the stock has a tendency of getting into a breakout mode at the first zone where the market gets into a breakout, and if that's the case, then we expect that these stocks would see a lot more buyers when the momentum accelerates for the indices. So I think purely in that regards, just looking at the tendency of these stocks, Medanta, Navabharat, etc., and such other names which have been recently listed, the fact that these stocks are breaking out at a time when the indices are just breaking out is a sign of confidence, and I believe that we should probably be looking to hold on to these names.
Rajesh, Akshay from Bangalore wants to make a switch from Dr. Lal Pathlab, which they're making a loss of around 20%, to some other hospital stock. For a long-term investor, which would be the best pick?
See, these diagnostic stocks have gone in a massive correction. Some of them have corrected by more than 50% in the last 1 year or so, because of various reasons. Because after COVID, the business went down for for the reason of COVID checking and all. If one wants to switch to a hospital stock, I think in the large cap, Apollo Hospital fits the bill, because with 10,000 beds and 70 hospitals, pharmacies, 3,000 plus pharmacies, the company is doing very well. Even 2-3 days back, the management has clarified that the kind of cash burn they were having in the online business is going to slow down. So that's again one of the positives. So for a long-term horizon, although it's run up quite a lot, I think this stock can be bought.
All right, on that note, we'll actually slip into a break on this edition of Buy Now, Sell Now. Stay tuned. When we come back, we'll continue taking all of your stock-related queries, so don't go anywhere.
Days. What are markets really stealing the show?
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. What are markets really stealing the show?
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. Broader markets really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. Broader markets really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now.
Welcome back, and you're watching Buy Now Sell Now on ET Now. We will be taking all your stock related queries, continuing with that, so you can send us your queries on WhatsApp, YouTube, or even our Twitter link. Rajesh, the next query is from Bala from Chennai, and this one is on Shriram Finance. Is it a good time to buy Shriram Finance for the long term?
See, one can buy the Shriram Finance for a longer term. It's a good NBFC, basically focused on truck financing, and with the kind of infrastructure spends and all going on, I think this business is going to do well. Right now, it's in a downtrend. Maybe a good level to enter would be 1150, 1180 odd levels.
Okay, this one is from Srinivas and Kunal. He's bought Astral at a level of 2,030 rupees per share. He wants to know whether he should hold it for the next 6 months or should he look to average it?
Yeah, you may just hold on to the stock as of now. It's always better to average when the stock gets into the thick of momentum or gets into any major oversold territories. But when a stock gets into a consolidation, it becomes very difficult to try and average. So I would suggest that you hold on to it as of now. In case if the stock manages to pick up pace as well as momentum, crosses about the 2,100 mark, that could be a possible breakout point for the stock, and you may look to average. Or on the other hand, if the stock corrects and say comes back towards 1750, 1800 zone, that's also again a zone to average on dips.
Rajesh, Padmaseva Rao from Bangalore has bought Mrs. Bectors at 480 rupees per share. Should they book profit here? What is your advice?
See, one should book profit. It's a very small company working in a very regional market, I would say. there are better choices in this space. So one can go ahead and buy Jubilant Foodworks or ITC or some good names, I would say. You are sitting in a profit, book a profit.
What's your view on this as well for the short term, long term?
Well, I would be very bullish on the stock from here on. I sense that this is the big breakout which has come by for Bector Foods, trading at 550.49 approximately at current levels. And I would probably sense that if you can hold on to it, say for another 12 months to 18 months, there could be a significant potential on the upside for the stock. So if you are okay to hold on to the stock from that kind of a time frame, then I think it makes sense to carry on with your holdings.
All right, talking about Mrs. Bector's, it just reminds me that Kunal, you were supposed to order that breakfast for us. Tomorrow is Friday. Let's not forget about that. But moving on, let's talk about the next counters. Muthoot Finance and Tata Consumer Products. This one is what Dhananjay is asking about. He wants a technical and a fundamental view for the next 1 year. Should he buy at current market price? I will take this one to you, Kunal, instead. What should his strategy be for these counters?
Yeah, we can look to order at 11 to 11:15 a.m. tomorrow.
Very smart, very smart. But we'll still, we are all now tech savvy. We have a lot of food delivery apps. I'll make sure you order it for us.
Done. So on Muthoot Finance, coming to that stock, I would probably sense that Muthoot Finance, Manappuram Finance, they're getting into a bit of a laggard phase. I was probably expecting that these stocks would probably break out much earlier, but the fact that these stocks are just about consolidating, unable to find any major momentum, I think it makes sense to switch out of the stock or avoid the space as of now. Let these stocks confirm a breakout and a decisive breakout. Maybe in the span of the next 2 to 3 months, if Muthoot Finance crosses 1150 mark, that could be a strong potential breakout candidate. Manappuram Finance, on the other hand, if you can probably buy the stock on dips, say closer to 105, 104 level, that could be a good entry point for Manappuram Finance.
Okay. Rajesh, the next query we have is on Apar Industries, and this one is from Vishal from Dubai. They want your long-term fundamental view on Apar Industries. They're holding it 15 shares at 1,300 rupees.
It's a hold from our side. The company has been doing very well. The numbers have been positive, and I think the kind of prospects that management has given for the coming 2-3 years, when we talked to them sometimes back, this company is going to continue to do well. One can carry on holding with the stock for a medium-term target. One can have a target of 2,500, 2,600, but for a longer-term horizon, we have a target of 3,000 plus.
Okay. This one is actually coming in from Kapil, and he has Dr. Reddy's at an average price of 4,468 rupees per share. HCL Tech at an average price of 1,169 rupees per share. Do you recommend to hold or sell, or is there a better investment opportunity? What's your take on this one, Rajesh?
I think both are very good stock for a longer term horizon, but at this point of time, if I look at purely valuation basis, I think Tech Mahindra is a better bet than HCL Tech. One can switch to Tech Mahindra. And as far as Dr. Reddy's lab is concerned, I think one should continue to hold. If it falls further by around 10% from the current market price, it would be a buy.
Okay. Kunal, the next query we have is from Srividya from Chennai. Now, they have 1,000 shares of IEX at 1,157 rupees per share, beg your pardon, and they want to buy. They bought even 200 more shares just a couple of days ago. What should they be doing with this? Should they look to average more or continue to hold this?
You can continue to hold on. I think you've not bought it at an elevated price. Generally, we've seen viewers buying the stock at 200 to 20 odd levels. And I think 125 is a major base as well as a support for IEX. In fact, over the last many months, I've advised that if the stock comes closer to this 125, 130 zone, that's where you should look to average. So I think you can continue to hold on. And in case if the stock corrects and comes back to this zone of 125, 130, look to average further.
Okay, next one also coming your way, Kunal. This one's from Sagar. He wants a technical view on the IT index as a whole. He's saying the valuations are seeming very expensive right now. And just because Nasdaq goes up, we celebrate. The earnings are not good, but some of the stocks have reached an all-time high levels already. So what's your take coming in on the tech sector, Kunal? Do you think that the valuations are expensive, or how is it looking on the charts? Do you think some more steam left?
Yeah, well, I would probably be giving more weightage towards the price action. Of course, the prices always lead in terms of the breakouts. So, what we've distinguishedly, seen for these IT index is the large cap names making a comeback. And when large cap stocks like TCS, HCL Tech make, strong comebacks for themselves, we expect that the sector tends to do pretty well. Even the mid caps have started to chug along. Many of the stocks have broken past about their long-term averages. Now, a sector tends to move up higher when you have majority of the stocks moving up higher. I'll give you an example, like for example, the auto stocks. The fact that the auto indices are not moving, auto index is not moving towards an a major high is because there are many stocks which are still trading below their 200 DMAs or just closer to the 200-day moving average. Only handful few, the likes of M&M, have been doing pretty well. So that's not the case with IT index, and I think that's the only sign of comfort for an IT trader. So I would be bullish on the IT pack. Until the time you have large cap names like TCS and HCL Tech which are showing signs of strength, you have to stay bullish.
Okay. Rajesh, this next query we have is also from your namesake, that is Rajesh, and he's from Punjab, and holding Lupin at a price of around 857 rupees per share. They're a long-term investor. Should they look to average this out? What is your view?
See, this quarter numbers has been bad. That's the reason the stock witnessed a cut. And I think the long-term prospects are pretty good. The product range, the product profile the company has is good. They have gone into cost optimization. One can continue to hold. Averaging at this point of time would not be recommended because we need to see at least one more quarter numbers before we put our new money into that. So one can continue to hold. If one wants to buy something new in pharma, I think one can look at Cipla.
This one is coming from Ajay Kumar, and he wants to know if Solar Industries is a good company fundamentally as well as technically to look for a fresh entry, and if yes, then what would be the best price? Let me first come to you, Kunal, to get your view on which would be the best price to enter Solar Industries, and fundamentally we'll take that question to Rajesh after you've responded. Kunal.
So from 4,500, the stock has already corrected towards 3,600, which means a broad correction of almost 20% from that 4,500 mark in the last 2-3 months for Solar Industries, and that's an average correction. The stock seems to have bounced back in the last couple of days, and I would believe that it could probably be a good time to try and enter the stock at current levels. An ideal level to buy, frankly, would be closer to the 200 DMA, which is at 3,500 mark. So a buy on dips is what you can start at current levels.
Buy on dips at current levels is what Kunal is advising for Solar Industries. But fundamentally, do you think it makes sense to look at this one, Rajesh, for the longer term?
See, for a longer term, Solar Industries is a very good buy. It has one division that is catering to defense also, and that is the plus point for this. Otherwise, also the numbers have been very good. Company is doing well. It's a buy on dips category stock, as Kunal pointed out. For a longer term horizon, 5,000 plus can be a good target, but one should accumulate at dips. The only problem with this counter is low volume. The volumes are very low. But because somebody is looking for a long term, I don't think that would matter much. One can continue to hold and buy on dips.
Rajesh, Rajan is holding Gati for the last 2 years. They purchased it at somewhere around 124 rupees. And as of now also, you can see it's roaming around those levels only. So what should they be doing? What is your suggestion for Gati?
I think one should get out of this stock. The stock is not doing well. The numbers are not that exciting. And despite the fact that the sector has been doing well. So once I switch to Concor in the same sector, that can give very good returns.
Okay, this one's from Vimla George, 1,100 shares of KPIT Tech at 665 rupees per share. Kunal, she wants to know if it's a good idea to sell at current levels or wait for some more time before she makes that exit. She's anyway sitting on a profit.
Well, I would suggest to wait for some more time. The indicators are not yet entered into the overbought territory. Maybe another 5% rise, say till 900, 915 levels is where you may look to start booking profits. That's where I believe the indicators would start to get into an overbought territory. But a gradual sell on every rise is what you should ideally do. And with every rise, you need to trail your stop losses higher as well.
Okay. On that note, we're going to slip into a very short break. Don't go anywhere. We will be continuing with all your stock-related queries.
Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. Broader markets really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. Broader markets really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. Broader markets really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. Broader markets really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest
Welcome back. You're watching Buy Now, Sell Now on ET Now, and flashing on the bottom of the screen are Nestle Q4 numbers, and on the horizon it's looking like an inline set of numbers. But let's ask the pro about it, and that is Vinny. Vinny, How are Nestle numbers looking like right now? It looks like it's an inline set of numbers when you compare it with ET Now estimates.
Absolutely. Comparing with ET Now estimates, what we're seeing coming in is revenue is almost in line with what we were expecting. We're expecting at 4,300 crores approximately. It's coming at 4,256 crores. Year-on-year basis, obviously when you look at Nestle's numbers, we're seeing a revenue growth of around 13.6%. And EBITDA, actually, the EBITDA performance, the margins, what we're seeing in terms of the operation performance, it's better than what we were expecting in terms of margins. We were expecting the margins to be at somewhere around 21%, 21.7. It's coming at 22.9%. Year-on-year basis, yes, it's flattish, but better than what the street was expecting, better than what we were expecting as well. Now, overall, domestic sales growth was broad-based, is what the management is highlighting. Healthy balanced growth in terms of pricing as well as volume-led growth. And overall, robust performance we were expecting in that out-of-home consumption. That's what is coming in the commentary as well, that they have seen a strong growth coming in out-of-home consumption. So let's not forget, the base was a bit lower as well last year and the year before that because of the COVID situation that was going on. So yes, obviously seems like a good, decent number is what the company has reported as of now. Inline set of numbers, delivered highest double-digit growth in a decade, led by sustained volume growth and mix-led growth. That's the word coming in terms of commentary from the management as well.
Okay, positive commentary coming in from the management, and now you can see the stock also near its day's high as 0.1.5% uptick coming in for Nestle on back of that Q4 numbers. We'll dwell into that later on, but let's move on and let's continue taking all of your stock related queries then. And this one is from Swayam Chopra, and this one is for you, Kunal. He's saying he's booked good profit yesterday in Escorts 1,980 put option. Now he wants your view on Escorts 2120 call option. He entered 10 lots at 9.5 and it's for February expiry.
Yeah, I think you can continue to hold on. The stock seems to be on the verge of a breakout, inverted head and shoulder pattern breakout, 50 DMA breakout for Escorts. So maybe another one leg of up move, 1 day of up move, and the stock will probably confirm both of these pattern breakouts. So I think you should continue to hold on.
Okay, Rajesh, the next query is on Venus Remedies. The viewer is holding 170 shares at 267 rupees. Should they average or exit this strong if they're considering for a long term now?
See, I don't think there is any point in averaging this company. The numbers have not been that exciting. It's not doing well. So no point in putting new money. Rather, I would say exit on rise should be the strategy. Any upside around 170, 180 odd levels could be taken as an opportunity to exit.
All right, the next one is coming in from Stapana and wants to know whether it makes sense to start buying PI Industries on back of good quarterly earnings. Do you think that this sort of a good quarterly earnings momentum will sustain for this one going ahead, Rajesh? And therefore, it makes sense to go ahead and start buying PI Industries. The stock has risen by approximately 7% today.
See, one can go ahead and buy for a long-term horizon. I think today it has already 7% up, so one should wait for some amount of consolidation before putting in new money for a long-term horizon. 3,000 would be a good level to enter. The company has done very well. The numbers have been good. Going forward, also agrochemical business is going to do well, and these companies are going to be benefited because of the rural development plans of the government. And we should not forget that the next year is election, and this year also there are 10 states we are witnessing elections. So these kind of scenarios give good impetus to rural economy. I think one can continue to hold and buy on dips.
Kunal, next query is from Sandeep from Punjab, and they are holding 500 shares of Hudco at a price of 46.9 rupees. Kunal, what's your view on this one?
I think you should definitely look to hold on. My belief is that Hudco is getting into a big breakout mode. 4 months back, when the stock started to get into a strong uptrend from 36 rupees to 55, and then from there the stock has consolidated. I think this is a healthy consolidation for Hudco, and the stock should break past about the 55, 56 mark back again in the next couple of months. So I would be very bullish on the stock, would suggest a hold.
All right, with that, let me quickly kickstart with the rapid fire then. And this one is coming from Dhawal. CAMS, he's bought at 2,900 rupees per share. Should he average or sell? He can hold on for more 2 to 3 years, Rajesh.
Continue to hold. It's one of the biggest registers.
Lavish, Kunal is holding 400 shares of VLS at 230 rupees. What should they be doing?
I think you should look to hold on.
All right, this one is coming in from Seema. Spark is a counter that she's purchased at a price of around 465 rupees per share, 400 shares. Should she average right now, Kunal?
I think you should look to average at current levels of 200.
Rajesh, the viewers wants your view on Praj Industries for the next 1 to 2 years. Is it a good time to start averaging this one? They've not mentioned the buy price.
It's a buy from our side.
Kunal, ML wants to know a level to enter Bajaj Finance for a period of 1 year.
So I think maybe closer to 6,300, 350 is a better level to buy Bajaj Finance.
Rajesh, TVS Lab at the present price, is it a good buy? This is a query coming in from Sunil from Muscat.
See, if it's a time horizon of 12 to 18 months, yes, it's a good buy.
Gauri wants to know Poonawalla Finance or Bajaj Finance for a fresh investment for long term. Which one would you choose, Rajesh?
Both of them. In fact, both of them, one should allocate 50% amount in one and the 50% in the other.
Okay. Kunal, TP Vinod is holding wants to know, is it a good time to buy Ami Organics or Aavas Financiers?
Well, I would suggest to avoid Ami Organics. Aavas Financial, I think you should wait out for a breakout about 2,100, only then buy.
Alright, this one's from Dasaradi. He's holding Mirza International 200 shares at 68 rupees per share. Can hold for next 6 months, or should he look to book profits already, Kunal?
I think you should look to hold on for a target of at least 285 to 290.
Okay. Rajesh, viewers holding 200 shares of Birlasoft at 450 rupees. What should they be doing?
Continue to hold.
Okay, Srinivas wants to look to buy Bajaj, I beg your pardon, Berger Paints at current market price for a period of 5 years, Rajesh. Make sense?
It's a buy, but on dips, not at this point of time. Maybe 520, 525 would be a better level.
Okay, and with that, that was the last stock query that we were taking for today. Thank you so much, Kunal. Rajesh, for joining in with us, and thank you so much, viewers, for tuning in to Buy Now, Sell Now on ET Now. It's a goodbye from Sharon, myself, as well as the team who put the show together.
When our big boss was MD.
Voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. What are markets really stealing the show?
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days. What are markets really stealing the show?
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your portfolio with top trading ideas.
It's been 1,000 points in just the 9 days.
Broader markets really stealing the show.
We bring you money-making ideas from our seasoned market experts.
Should remain to a range.
Expecting a move towards 150 in the short term. They are actually going to make profit.
And analysis from a top-notch research team. The biggest voices from top honchos of India Inc. share their views, and global market gurus predict the trends which impacts your investment decisions. Get exclusive stories which can move your stocks every day at 9:05 a.m. Catch the market every trading day only on ET Now. Kickstart your mornings with Nikunj Dalmia, India's most experienced market anchor.
Banking space per se is in a sweet spot.
And power up your
Another day of decent gains for the markets. Nifty holds around 18,100 mark. FII buying sustained. All sectors are in green. Real estate, IT do the heavy lifting for now.
It's a big ET Now exclusive. Market veteran Ramesh Damani says India's bull market is intact and we are the only nation that can compete with China in terms of manufacturing. He remains bullish on defense, railway, PSUs and companies that can manage data efficiently. Also sees value in the new age tech companies.
Indigo Aviation as of now falls. This is after equity changes hands in blocks amounting to more than 14 million shares. Sources say Shobha Gangwal may have sold the stake but at a discount.
On the other hand, ONGC surges after upbeat commentary from the management. They expect oil and gas production to rise by 5% in FY24. Another cut in windfall gains tax also aids sentiment. Tech Mahindra meanwhile is pricing in the change in leadership. Remember, Infosys and Wipro saw a re-rating after their CEO changed.
Nestle just declared its numbers. It's a steady Q4. Earnings meet estimates across parameters. CMD Suresh Narayan says in a press note that they have delivered the highest double-digit growth in the decade, led by sustained volume, mixed growth. They will continue to focus on premiumization.
Hello and welcome. You're watching Markets at Noon on ET Now. I'm Anisha Jain. With me as always is Pankaj Poddar. And the market, at least for now, is holding in a fine petal. 18,100 is what we are staring at. So